Welcome to Semiconductor News Decoded. I'm Hondo Tai, with 31 years inside the semiconductor industry, bringing you the real view from the factory floor. Today's topic: massive money is flooding into semiconductor ETFs. What's really happening behind the scenes? In the second half, I'll also share why I personally stay away from semiconductor stocks.
As always, I'll explain everything in the most simplified way possible. Even a middle schooler should be able to follow along. If you're a specialist watching, some parts may feel oversimplified, but I'd like to prioritize giving everyone the big picture first. Today's entire first half runs on a single analogy: bubble tea shops. So sit back and enjoy. Let's say a massive bubble tea boom hits your town. Social media is exploding. Bubble tea is the future. Buy every company connected to bubble tea. Nobody wants to miss out, so people rush to dump their savings into a piggy bank that buys all bubble tea-related stocks at once. In other words, a bubble tea ETF. That's exactly what's happening right now as money floods into semiconductor ETFs on the back of the AI boom. The structure is completely identical. Here's the first trap of any boom. Once word gets out that bubble tea shops are printing money, new shops start opening on every corner. Within 6 months, 10 shops are lined up outside the train station. And, of course, a price war breaks out. Bubble tea is still selling, but the profit per cup keeps shrinking, and some shops start closing. Demand is growing does not mean everyone profits. That's the paradox playing out right here. On top of that, stock prices price in expectations before the actual sales happen. People who bought in before the bubble tea boom hit made a killing, but anyone who bought in after seeing the big headlines was already buying at the top. Seeing everyone's buying in the news and then buying is, in the world of markets, almost always too late. That's the unavoidable fate of following the news cycle. Here's the second trap. Imagine you're working part-time at a bubble tea shop. Your income is already tied to the bubble tea boom. If you also put all your savings into bubble tea company stocks, think about what happens when the boom ends. Your part-time pay gets cut, your stocks crash, and your savings collapse. All three hit at exactly the same time in the same direction. That is the classic too many eggs in one basket situation. At this point, you might think, but someone who knows the bubble tea industry well could spot warning signs early and get out in time, right? In practice, when you're inside the industry, bad news becomes invisible. You keep telling yourself, our shop is fine, or things will bounce back next month. The closer you are to an industry, the slower your judgment tends to be. I've seen this play out many times over 31 years. Knowing the industry doesn't mean safe to invest. If anything, too close to see clearly is the more accurate truth. Let me summarize the bubble tea boom stance. The bubble tea industry will grow, but I'll be cautious about loading up on bubble tea ETFs. The 3 reasons. First, even in a boom, not every shop wins. Second, the more your income is already tied to bubble tea, the more dangerous it is to invest your savings there too. Third, being inside an industry can actually dull your judgment. Those are the 3. And honestly, my current position on semiconductor ETFs is almost exactly the same as this bubble tea story. Semiconductors will grow, but I'm cautious on semiconductor ETFs. From here, I'll swap out the bubble tea analogy for real industry data and history and explain the reasoning properly. The major semiconductor ETFs currently attracting retail money in the US market are 4: SOXX, SMH, SOXL, and SOXS. SOXX and SMH track the index in a straightforward way. Standard funds suited for long-term investing. SOXL is a 3x leveraged bull fund that moves 3 times the index on the upside. SOXS is a 3x leveraged bear fund that moves 3 times the index on the downside. Both of those last two are short-term speculation tools, not long-term holdings. SOX and SMH are essentially buy the long-term growth of the AI semiconductor era funds. They hold a diversified mix of the major names, NVIDIA, TSMC, Broadcom, and are designed to capture the AI infrastructure tailwind in a straightforward way. For anyone who wants broad, long-term exposure to the semiconductor industry, these are the natural trees. The leveraged funds, SOXL and SOXS, carry a structural weakness called volatility decay. Here's an example. If the index rises 10% on day 1 and falls 10% on day 2, a normal fund goes from 100 to 110 to 99, essentially flat. But a 3x leveraged fund goes from 100 to 130 to 91. Value is destroyed just from moving up and then back down. These are strictly short-term tools, not suitable for long-term holding. Looking at money flows, retail money began flowing seriously into all 4 ETFs from the first half of 2025, and into 2026, the inflows into the standard type SOXX and SMH have become especially visible. The premise that AI equals semiconductors is already widely baked into market expectations, and retail investors worldwide are acting on fear of missing out. What's striking is that both SOXL and SOXS are seeing inflows simultaneously. Bet it goes up money and bet it goes down money are both growing at the same time. Overall interest in the semiconductor market has spiked, and speculative money looking to trade the swings is piling in on both sides. In bubble tea terms, people are placing chips on both this shop wins and that shop goes under. Which brings us to whether I, with 31 years in this industry, am buying semiconductor ETFs myself. Short answer? No. I'm not actively going into semiconductor ETFs or individual semiconductor stocks. The reasons are almost exactly the same 3 points I laid out in the bubble tea section. First, I don't want too many eggs in one basket. I've spent 31 years in the semiconductor industry. My salary, bonus, retirement package, and pension are none of them fully insulated from the health of the semiconductor sector. Putting my investment money on top of all that into the same place means when the industry cools, my job and my assets get hit simultaneously. Exactly like someone working at a bubble tea shop who puts their entire life savings into bubble tea stocks. Second, semiconductor demand growing does not mean every company's profits grow. This is the exact same price war dynamic as the bubble tea shops. When demand looks strong, every company ramps up capital expenditure simultaneously, and a few years later, the result is oversupply, price collapse, and a sudden wipeout of profits. I have watched this cycle play out multiple times over 31 years. The memory industry is the textbook example. Every time demand looked strong, companies aggressively ramped production, and 6 to 12 months later, prices crashed and massive losses followed. This pattern has repeated itself over and over. No matter how strong AI demand gets, the historical lesson is clear. Only a small number of players end up capturing the large profits. That's what the cycles consistently show. Third, the closer you are to an industry, the duller your judgment becomes. People assume, I know this industry, so I can invest safely. But in practice, you get anchored to your own company, your own customers, your own supply chain, and you systematically underestimate warning signs by telling yourself, our situation is different. When it comes to investment decisions, someone reading cold data from the outside often has cleaner judgment than someone on the inside. Let me be direct about where I stand. Bullish on semiconductor demand, cautious on semiconductor ETF investing. My view that the semiconductor industry will keep growing has not changed. But industry growth doesn't mean every investor wins. And the more your income is already tied to a specific industry, the more important it is to diversify your investments elsewhere. Before choosing ETFs or individual stocks, take a step back and ask yourself what industry your income is actually linked to. That's the right starting point. That's all for today. I'll keep bringing you semiconductor news and analysis. So if you found this useful, please like, subscribe, and I'll see you in the next video. This has been Hando Tai on Semiconductor News Decoded.